Morning, Chakri. Let's get in a sense from you then, first up, as to what the outlook is when it comes to the entire FMCG sector, because that's really at the forefront. We've seen the sectoral rotation, as Kunal says, take place, and now 8 straight days on the trot where FMCG is leading the way. Is this a trend that's likely to continue?
FMCG, as a sector has, in the last couple of weeks has actually done decently well. This is on back of the expectation that, there would be a rural recovery, etc. A good monsoon, subsidies in the budget, expectations of all of that. But we haven't seen, except for, maybe Marico on one side, a couple of names. We haven't really seen any kind of meaningful volume pickup yet, and nor has there been seen and any uptick in their earnings estimates for the ongoing next quarters, coming up quarters. So on back of that, I think, would still be a kind of wait and watch for this rural recovery to actually become real before actually investing.
Chakri, hi, morning. What's the anticipation from Infosys, given that TCS, even though it was an inline set, the markets did what they did. For LTI Mindtree, it's a bit of a mixed bag. It's been a revenue beat, but PAT has been muted. And then you've got Infi, wherein, one is anticipating that constant currency revenue is going to be at 2.25% sequentially, slightly better perhaps.
If they do that around the 2.5, 2.2 kind of a number, then clearly, the market will say, or I will be kind of relieved. And one of the other things is, now the expectation of a rate cut in the US has kind of accelerated to September. If that happens, then lots of deals which have been on hold, and that Infosys and TCS and all these companies have big chunks of order books coming from the financial services industry. So very quick to convert the order book into revenue. They'll turn it into a billable book. So I think a combination of this, so I think the guidance for the next 2 quarters is more important. Long term, we all know the story. So if we see that evidence that, orders are beginning to thaw, I think then yes, but that's the key to watch.
Okay, let me now welcome on board Shivangi Sarda as well and find out what she's making of the market right now. Shivangi, hi, morning. You think some more consolidation could be on the cards for the Nifty and the Nifty Bank? What are your thoughts?
Very good morning. Thank you for having me. So we've seen that, there has been a range breakout on the daily frame for Nifty, and good strong follow-up action can be seen here as well. Even the Nifty put call ratio is above 1 from the last 1 week, and quite sustaining there. So clearly it indicates that, any small dips are being absorbed by the bulls with sustained buying at these higher zones. And, put writers are also making their base very comfortable here. But of course, we're heading into the budget, week, and there will be some sort of volatility here and there. So we are looking at, the upside of 24,750 immediately, and then 25,000 zones for Nifty, with a support of 24,350 levels. So buy on declines to continue here for the Nifty index. Now, talking about Bank Nifty, here we've seen some sort of consolidation and lackluster move from the last 7 sessions. And, follow-up is clearly missing over here. Although some of the PSU names have just started moving, but the heavyweights are sort of consolidating. So we are expecting somewhat range-bound move over here with a range of 52,000 and 53,000 levels.
Right. But sectorally, Shivangi, where is it that you're seeing leadership and weakness?
So, sectorically, talking about the leadership, of course, IT has been one pocket which has been driving the index from the last 1 week. So definitely IT pack has to be the leader, which will continue. Also, some of the auto space stocks have now retraced and now started moving. So these are 2 sectors which we can watch out for the leaders. And of course, the stocks which are not performing are pharma. So, we have seen some sort of move over here. But, absence of follow-up is somewhat disturbing this space. So pharma should be one pocket which is, in the weakness and should, continue in such wariness. So yes, these are the sectors to watch out.
Look at cement. Chakri, there's a lot of activity in cement suddenly. M&A, cross deals, pricing power coming back. Could cement be the new steel? What happened to steel, let's say, first half of the year? Could that happen to cement?
Cement, clearly the volumes for the sector will continue to grow. Pricing has not been there. Prices have in fact fallen about anywhere between 3 to 5%. And that trend is unlikely to reverse, except that, the valuations for, let's say, JK Lakshmi Cement, Dalmia Bharat, these companies, now Dalmia Bharat has quite a strong presence across various segments of the market, and its valuation has fallen to one of the trough levels that we've seen in the last 2 or 3 years. Given the fact that competition is coming because, with Adani Ambujas and ACC acquiring companies, and therefore volumes will they be there, but pricing power will kind of go away. All that is kind of reflecting in the valuation. So Dalmia Bharat, JK Lakshmi, companies like that. But as a sector, I think still one should be with the leaders, which is Ambuja and Ultratech. And they are consolidating their market share, as seen in recent set of acquisitions that they've made.
Shivangi, suddenly oil PSUs have regained momentum. GAIL, ONGC, HPCL, BPCL. Is there a trade now coming in oil PSUs?
Yes, definitely. Oil PSUs, we've seen specifically, if we talk about ONGC, which I am liking at these levels, from the last 4 weeks, it's, making higher highs over here. After a consolidation of the, last 12 weeks. So definitely these stocks are now showing momentum and, a pretty much, the pace is pretty much higher over here. So, and of course, the budget will kind of have a tailwind on these stocks as well. So, I am looking at ONGC for the next 335 odd levels with a support of 315 if we talk about the technically. And there are, in other pockets also like defense for that matter in the PSU space, which is looking quite positive.
Okay.
Attention to Asian Paints, for a company which always was priding in their ability to retain market share, new product launches, distribution. Look at the numbers. Competition has hit them.
You're absolutely right, Nikunj. In fact, the prices are down about 3% while volumes have grown 7%. So, the management says that it's because of muted demand. We would think that is actually because of more competition. So the volume is getting distributed across the new entrants who come in, new big entrants who come in, whether it's JSW, name it. They're all very big players with excellent distribution pan-India networks. And so that is only going to get stronger. They have all the new incumbents, the new players have strong brand names, even though they're new to the business. So that will allow them to take market share away quickly. So given all that, and in spite of all this, Asian Paints still trades at 50 times for an ROE, which will come down. So therefore, I think we would continue to stay away.
But Chakri, is it time to think contra? We know the problems in Asian Paints. We know the problem in Titan. We know the problem in FMCG. And they will not be permanent. So if you're buying some of these consumer FMCG or staples, you're buying them at the peak of pessimism and after 2 years of sideways move.
Yeah, absolutely right, Nikunj. In terms of FMCG, I think that's a story to think through because, as rural improves, all those good things that are expected to happen. And there's, for example, Nestle recently announced there would be some kind of the royalties that they pay to their parent will bring about some amount of product innovation to India. So as new products come in, volumes pick up, the FMCG will do better. But on the other hand, paints, it's brand new competition coming in, sizable competition coming in, and therefore their ROE is only likely to go down rather than go up. And therefore FMCG, yes, but paints I would stay away from.
Kunal, oil
Entertainment with the latest news of the fund raise about 1,900 odd crores via the 10-year FCCB. Brokerages are talking about how there is going to be a complete change as well in the sector landscape with the RIL Disney JV. What is the outlook when it comes to the promoter ownership? Does that continue to remain a challenge for Z?
I think your last point is the most important, which is the promoter, how the whole thing pans out is a wait and watch, and that will kind of impact the story. As far as raising cash, I think it's while some might debate they already have enough cash. The point is this is an industry, the media industry is consolidating very fast. You need the bigger players will take a market share. They'll have the ability to do both to add OTT as well. And so against all this, I think, but Z, we would stay away for the reasons not of competitions, but the reasons of uncertainty on management.
Well, not too many media.
Up and coming, there's going to be quite a bit of focus on real estate, infrastructure development. Any stocks that you would look at in order to capitalize on this move?
I think real estate and infrastructure development, when you talk about, and within infrastructure, if you look at companies like Hindustan Construction Company, this company has, capabilities, technical capabilities in nuclear constructing of nuclear power related projects and complicated projects, which is going to be a thrust for this defense, for this budget coming up, where it's spent on in terms of defense or whether in terms of infrastructure related ones. So those infra companies, yes, and some of the defense companies also still will look at.
All right, Chakri, going to let you go on that note. Thanks so much for joining in. What is the pre-open market rate indicating? Well, a bit of a softer stance, at least on the Nifty. And for the Sensex, holding on mildly in the green, or just as I speak, by the way, it's a near 2% gash on the pre-open rate for the Sensex. But remember, only pre-open 9:15 will really tell the tale. Let's find out what those mid-cap trading calls are. Shivangi, go ahead with your top bet.
So I've chosen KPIT Tech, from this space, and we are seeing that, there is a lot of action in the entire IT space. And after the volume and price surge in this stock, we've seen that the stock is sustaining at the higher zones, and also there is a good amount of, buying, and RSI is showing a positive divergence here. So recommending a buy here with a target of around 1950 levels with a stop of 1825.
If you like this video, then like, share and subscribe to ET Now.